All right, everyone, welcome back to another Cryptopolitan live stream. Um, I'll be honest, folks, this past week has been a roller coaster, even if the prices don't really reflect that. If you just look at the headlines over the past 5 to 7 days, uh, nothing about this environment should be constructive. Nothing about this should be supportive for risk assets. We are still in the middle of an active geopolitical conflict. The Iran situation hasn't cooled off. If anything, it's actually escalated even more. Uh, we have seen a series of events, and I think what's been really interesting is not just the fact that there's a conflict, but how unpredictable that sequence of events have actually been. Now, we started with Trump issuing that 48-hour ultimatum. Um, he made it very clear, very direct signal to the market that things could escalate quickly. Then what happened was that there was a postponement. We got an extension almost of a 5 day negotiation period, uh, which initially gave markets a bit of breathing room. People started thinking, okay, maybe this is heading towards de escalation. But then almost instantly after that, we got the 15-point negotiation proposal from the US, and Iran just outright dismissed it. So within the span of a couple of days, we saw all of this play out. We've gone from urgency to cautious optimism almost, right back into uncertainty again. And you can see the constant flip flop within the markets as well. As you can see today, there's been some more rhetoric of the war being extended a bit longer. And you can see that Bitcoin is taking a little bit of a dip here now. Uh, Now, typically in a situation like this, and we've seen this play out historically, you would expect a very clear pattern across asset classes. Uh, you would expect oil to spike, which, if I go on to Brent crude now, we can have a quick look. It is spiking. Um, and what you would expect is volatility to increase across the board, which it has. And you would expect capital to rotate into traditional safe havens. But here's where things actually get a little interesting. Uh, because, yes, oil has been extremely volatile. Now it's hovering over 100 again. Uh, and it's seemingly reacting to the headlines as it comes out. But then you look at gold. So let's go on to gold, and you see that gold is in a massive decline. Even today, we're in a decline, right? But gold has had one of its worst weeks in decades, and that's not a normal reaction in a geopolitical crisis. This is supposed to be the moment where gold proves its role. This is the exact environment gold is designed for: uncertainty, conflict, inflation risk. At the same time, traditional equities haven't held up well as well. So if you go, let's go check out the S&P 500. We can see that that's down as well. And on the week, it's down around 0.68. But if you actually look across the month since the war began, it's actually down about 4%. So that hasn't held up well as well. So traditional equities not performing well, gold not performing well. So if you just stop there, the conclusion would be simple, that there is a sort of risk off environment across the board. But then you bring Bitcoin into the picture. Now, if you measure Bitcoin's move, we're taking a bit of a decline today, but regardless, even with that, so if we go back here, we're still up over 5%. So Bitcoin has actually held up really, really well. And suddenly that entire risk on narrative starts to break. Bitcoin hasn't followed that script. In fact, it has actually outperformed almost all other asset classes out there. And that's the part I really want you guys to focus on today. It's not rallying in a clean risk on environment, of course. This isn't Bitcoin moving because liquidity is flooding the system or because the Fed is cutting rates. This is Bitcoin holding its ground and even showing strength in the middle of geopolitical stress. And that changes how you have to think about it. Now, we've spent years debating whether Bitcoin is a risk asset, whether it trades like tech stocks, whether it's just another liquidity driven trade. But moments like this is where those narratives gets tested. This is where the market shows you what it actually believes. And right now, what we're seeing in Bitcoin, not it is definitely not behaving like a traditional risk asset. It's not collapsing alongside equities, and it's not reacting like gold either. It's just doing its own thing, and that's happening while everything else is sort of struggling to find some sort of direction. Now, I certainly do not want to jump to conclusions just yet, and we'll get into that detailing later on in the stream. But I think I will say this: markets don't ignore signals like this, and institutions definitely don't ignore signals like this. And when you have a week where oil is super volatile, uh, where you have gold breaking down and Bitcoin is quietly holding up in the background, people tend to notice. And that's exactly where today's conversation is going to center around. What we've seen in the middle of all of this chaos, this entire macro environment, we have this news, right? We got one of the biggest names in traditional finance making a move on Bitcoin. Not in a bull market, but here, right now. And that timing is also not random at all. So, what we're going to do in today's stream is break this down properly, because once you start putting those pieces together, the picture becomes a lot more clearer. And more importantly, it tells you what to watch next. Okay, so let's break down the news, right? In the middle of this macro chaos, in the background, we got a very important signal from institutions. Morgan Stanley filed for a Bitcoin ETF. Now, at first glance, you might look at this and think, okay, we've been here before. We have other Bitcoin ETFs. Uh, Crypto ETFs aren't new anymore. But that's exactly why this is worth slowing down and actually understanding properly. Uh, to really sort of understand why this matters, you have to sort of look at the big picture. Bitcoin today is not what it was 3 or 4 years ago. It's no longer just this alternative asset. And it's definitely not something that only crypto native players care about anymore. It is a macro asset. And that shift really began in a serious way back in 2024 when Bitcoin spot ETFs were introduced into the market. That was the first real sort of bridge between TradFi and crypto at this massive scale. Um, it was also the first time institutions didn't have to worry about custody, private keys, all of the operational complexities. They could just get exposure to Bitcoin through a sort of structured, they already, understood. And the response was massive, right? We saw billions flow into these ETFs. Uh, BlackRock, of course, leading the charge through IBIT, which quickly became one of the fastest growing ETFs ever. But that was phase one. That was institutions saying, okay, you know what, we're open to Bitcoin. But what we're seeing now really does feel like phase two of that entire equation. See, the thing is, Morgan Stanley entering the picture is not the same as an asset manager launching a product. This is a bank, and it's not just any sort of bank. This is a $5.5 trillion institution sitting right at the center of global flows, right? Global capital flows. What they filed for is what's being referred to as MSBT, right? So in their S1 filing, it's MSBT, and this is their own spot Bitcoin ETF. Now, on paper, if you look at the structure, it actually looks very similar to existing ETFs. If you go ahead and read through the S1 filing, the entire structure seems very, very similar to existing ETFs. They've, it's set to be listed on NYSE, custody is handled by Coinbase, and administration by BNY Mellon. Structurally, nothing groundbreaking here, but that's also where the similarity completely stops or ends. Now, what makes this particularly different is not the product itself, but think of it in the way in which, think of it like distribution, right? And this is the part I think the market is still underestimating. Now, when BlackRock actually launched IBIT, it succeeded, definitely succeeded, because they have one of the most powerful sales machines out there. They were able to get the product in front of the right allocators. But Morgan Stanley operates in a completely different way. They don't just create products, they sit directly between the money and the allocation decisions. And they have over 15,000 financial advisors, and these are not passive sort of intermediaries. These are people who are actively managing portfolios, sitting across the table from high net worth individuals, pension funds, family offices, corporate treasuries as well. So when Morgan Stanley introduces a Bitcoin ETF into that system, it's not just about offering access, it's actually about integrating Bitcoin into existing portfolios. It's about making Bitcoin part of conversations that are already happening around asset allocation. And I think that changes the dynamic completely. Because now the question is no longer who can buy Bitcoin, right? It's the question becomes how much gets allocated and when. Now that's a very, very different conversation. In fact, this is a huge milestone because this would actually mark the first time a US bank, a US bank has issued for a spot Bitcoin ETF. Something no major American bank has done before. So all in all, this is why this is not another ETF added to the list of ETFs already. It's potentially the start of a new category altogether. Now, there's another layer to this that's important, right? Which is how institutions actually want exposure today. Because if you look at the broader data, the demand is clearly there. A large majority of institutional investors are actually bullish on crypto. And a significant portion is actually planning to increase their exposure. But at the same time, they're also becoming more cautious. Volatility, liquidity risk. There's this macro uncertainty now, which have made institutions more selective in how they enter the space. So, what I'm trying to say is when you put all of this together, institutional demand, a preference for regulated access, the move from Morgan Stanley starts to make a lot more sense, right? They're not early here, they're responding to demand that's already building beneath the surface, and they're actually positioning themselves to capture it. Now, I want to be clear here, this is just a filing, nothing has been approved yet, and the SEC process will definitely takes some time, but the intention alone is a massive, massive signal. So think about it, right? A bank of this size, they don't build Bitcoin infrastructure for a short-term trade. They don't do this of a 1 week sort of move. Right? They do this because they see the vision. They see Bitcoin becoming a permanent part of the financial system, and that's really the key takeaway from this entire development. Not the ticker, but the shift in mindset that's happening right now. And once you understand that, I think the next question becomes a lot more interesting. Why now? Why is this happening at the most unstable of macro environments out there? But that timing actually tells you the real story. Now, see, on paper, Morgan Stanley filing for a Bitcoin spot ETF in the middle of a geopolitical conflict sounds outrageous, but the demand is there. There was a recent survey conducted by Coinbase and EY that gives a very clear window into how institutions are thinking right now. Uh, I think it covered around 350 institutional investors. And the takeaway is simple. Institutions expect crypto prices to rise over the next 12 months, and they're planning to increase their exposure this year. That tells you this is no longer a short term trade for them. They are actively choosing to allocate into this asset class. Now, what's more important, I think, is what's happening on the regulatory front as well. Um, and it's this headline right here. There is bullish nature within, or bullish sentiment rather, within institutions. But what we're seeing now, and for a long time, one of the biggest reasons institutions stayed sort of cautious around crypto actually wasn't a lack of interest, it was a lack of clarity. But that is slowly starting to change now. You're now seeing the SEC and the CFTC move more in sync instead of pulling in different directions. There's been a push towards clearer rules, and even the messaging coming out more recently is starting to shift. Now that's might sound like a very small detail, but for institutions, that's a huge vote of confidence and a big, big unlock. It tells them, that the framework is taking shape, and more importantly, that they can start operating within it with a bit more confidence. So when you combine this entire landscape, improving clarity with rising institutional demand, the picture becomes much clearer. And it starts to make sense why Morgan Stanley has opted to file for this ETF right now, regardless of what's happening in the macro environment. They're stepping into a market where demand is clearly building, where the preferred access route is already defined, and where regulation, of course, is slowly moving in the right direction. And I think this tweet here from the CEO of Strategy sums it all up. It just shows you the scale at which uh, Morgan Stanley's wealth management, sits at, and what even a small percentage could mean for the Bitcoin market. So, I think just puts it into perspective on what this could signify. Okay, uh, I think there's also another key point just to discuss really quickly. Now, the war actually has not paused institutional interest in crypto. It's actually sort of accelerated it. What this environment has done is force a real-time re-evaluation of how different assets behave under stress. Gold did not behave the way it was expected to. Equities have not provided that stability, but Bitcoin has held its ground. And when you combine that with what institutions are already telling you, that they want exposure, that they prefer regulated vehicles. The move from Morgan Stanley again just makes a lot of sense. They're not reacting to the headlines. They are actually reacting to validation. Validation that Bitcoin can exist in a macro portfolio, not just during good times, but during periods of uncertainty like now. And once that box is checked, the conversation just shifts completely. It's no longer about whether Bitcoin belongs in portfolios anymore. It's how quickly institutions begin to scale that exposure and ultimately reduce the supply of Bitcoin. So everything we've discussed, the macro backdrop, Bitcoin's resilience, um, institutional demand, and Morgan Stanley stepping in now. All of that sets the stage. But the real question now is how this actually plays out over the next few weeks to months. Now, the first thing to understand is that this is a filing. Nothing has been approved yet. And typically, once an S1 is filed, the SEC review process typically takes around 3 to 6 months. Uh, so that window that we might be seeing is around second half of this year, around Q3 to Q4, if everything moves smoothly. But if approval does come through, the impact is not just about another ETF again entering the market. We already have flows, and in fact, we've seen the flows really dial up over the past few weeks. So if we go on to value, we'll be able to see from the start of the conflict, remarkably, Bitcoin has had 5 consecutive weeks of inflows. So that's a huge momentum shift there. And again, it tells you that the demand is there from institutions. So, as I was coming back to this, Morgan Stanley's filing it's just not competing for the same pool of capital like BlackRock or the other ETFs are, as we discussed. And that's why the distribution angle matters a lot here. This is not about one big spike in inflows. This is actually more about a steady structural bid that builds underneath the market. The second thing to watch is what happens next across Wall Street. If this filing progresses, it's very, very likely that other major banks, Goldman Sachs, JP Morgan, they could probably hop on as well. This doesn't stay as a one-off event for long. It becomes a category. And once that happens, you're no longer talking about institutional interest as a narrative. The third piece, and this is where things get a lot more immediate, is of course, it's the macro side of the equation. Right now, everything is still being filtered through the geopolitical situation, the energy shock, and what oil is going to be doing. Uh, and we're still trying to understand whether this conflict escalates further or starts to cool off. If we do get signs of de-escalation, if oil starts pulling back and markets move into a more risk-on environment, Bitcoin is very likely to benefit from that shift. And in that scenario, we're probably looking at a move back towards the mid 70K region. And I think the first real event that we really need to be paying attention to is that 5-day window, which expires in about 48 hours or so. So expect volatility as we move closer to that timeline. But yeah, this is the first event that everybody should be paying close attention to. Now, on the flip side, if things escalate again, uh, if energy infrastructure becomes a larger target, oil will spike, then markets across the board will feel that pressure. And I think in that scenario, Bitcoin holding key levels becomes the real test of this entire war outperformance narrative that we've been seeing. So in the near term, folks, price, of course, still matters. Key levels definitely matter. The market is still trading headline to headline, but underneath all of that, I think something much bigger is starting to take shape. A bank managing trillions in client assets does not build Bitcoin distribution uh, for a trade. It's simple as that. They don't do this because they expect a short term move. They are actively building this out because internally, their compliance teams, their risk teams, the allocation decision has already been made. And that's the part the market doesn't fully price in immediately. That shows up over time. So, to wrap up, when you put all of this together, what you're actually really watching now is two timelines playing out at once. In the short term, it's purely macro, geopolitics, and volatility driving price. But in the medium to long term, it's institutional adoption, clarity on the regulation front, and distribution expansion quietly building a much stronger foundation uh, for the market. Okay, folks, that's everything for today's stream. As always, I really appreciate you guys for tuning in and sticking through the full breakdown. We'll be back here next week with another market update as this story and the broader market continues to develop. Until then, folks, keep an eye out for this news because this is a huge one. And also, as always, trade safe, trade smart. There might be some volatility over the next few days if we don't hear anything or any update from uh, the Trump administration regarding the negotiation window. Okay, folks. Thank you, everyone. And I will see you all next week.